Michael Saylor just said he's never been more bullish on Bitcoin than right now. And while some people feel the same, others are on the verge of complete capitulation with Bitcoin below its previous all-time high. Welcome to one of the most intense Bitcoin FUD campaigns we have ever seen. The normies think Epstein is Satoshi. Yikes. At first glance, you may think, is Saylor out of his mind? Was Dan Pena right all along?
And I know who's behind Bitcoin. And it ain't some fucking Japanese guy in a cave. I know the guy. And when that comes out, you heard it here first. Bitcoin is going to zero. Zero. When it comes out, zero.
But when you look closer, it's pretty easy to see why Saylor is more bullish than ever, and Pena is likely in need of some new depends.
I just sharded.
Because if Saylor's right, this is one of the biggest opportunities in Bitcoin's history. Global uncertainty is at record heights. Trump is about to force the big print, and Bitcoin sits at one of its most oversold levels ever. The summer rewards those who have braved the bearish winter the most, and winter is coming to a close. This is Simply Bitcoin's Satoshi, and we have a lot to get to today. Let's go.
As to whether we are in the first stages of another extended crypto winter.
We are in a crypto winter. This is the fifth major drawdown of Bitcoin in the 5 years since I've been in the marketplace. This is a much milder winter than previous winters. It'll be shorter than previous winters. It's going to be followed by a spring and then a glorious summer. So don't fear.
Why do you feel so confident saying that?
The banking sector is supporting Bitcoin much more strongly today than we were 4 years ago. We've got the formation of digital credit networks, banking credit networks. We've got the support of the administration. We've got a Bitcoin president. We've got 12 cabinet members that are pro-digital assets and pro-innovation. And every single month, you see new advances in the digital asset space, which are bringing extraordinary productivity to the economy and a lot of capital to the asset class.
You know, you're absolutely right when it comes to the banks who have finally started accepting and embracing it. I mean, you could go back, of course, to BlackRock, not a bank, but BlackRock, the world's largest asset manager, finally pushing hard to get a spot Bitcoin ETF in play, IBIT, and the rest have done, depending on what Bitcoin is doing, up, down, all around. But let's get to strategy, because your company's average acquisition price for all those Bitcoin is around, what, 76,000? Can you just clarify that and make sure that I'm right on that?
Yeah, in that range.
Okay. That is materially above current market levels. And that has created unrealized, albeit unrealized, losses on paper. But at what point, Michael, does this disconnect between cost basis, what you paid, and the current market price become a problem for you and your shareholders?
Yeah, one of the misconceptions people have is that number really matters. The most important thing to understand is that we bought most of that Bitcoin with equity, not with debt. So if we had borrowed money to buy the Bitcoin, it might be an issue.
That permeable mentality is likely why Saylor will go down in history books. But let's take a look at why Bitcoin is sitting at arguably the most oversold point in history, and why that's insanely bullish. Global uncertainty just hit the highest level ever recorded, higher than 2008, higher than the COVID crash, higher than the dot-com bust. And this time, there isn't one clear trigger. It's basically everything. And we can feel it. Trade tensions are still unresolved between major economies, long-term agreements are missing, supply chains remain fragile. Geopolitically, the world is on edge. The Russia-Ukraine war continues, US-Iran tensions are elevated, multiple regions are unstable at the same time. Now, layer in the economy. In the US, forward indicators are softening, layoffs are rising, bankruptcies are ticking up, stress is building beneath the surface. China is still dealing with property market fallout and weak growth. Japan is facing rising bond yields. Europe remains stuck in slow growth and low demand. It's a synchronized global strain. Historically, environments like this unfold in two stages. First, volatility surges, liquidity tightens, risk assets struggle. Then, if growth continues to fade, policymakers respond. Rate cuts, liquidity injections, balance sheet expansions. You get the drift. We saw this exact pattern in 2020. So what does this mean for Bitcoin? Near-term elevated uncertainty can create volatility. But zoom out. Major financial stress in the modern era has consistently led to more monetary expansion. And Bitcoin was built for a world where currency supply keeps expanding. Short-term turbulence is possible, but long-term liquidity cycles are what matter. And those cycles have historically been Bitcoin's strongest tailwind. We also know what comes with all that money printing set to flood the system: inflation. And inflation is a major driver of Bitcoin adoption.
Bitcoin adoption has grown significantly since it was created over 15 years ago. It's the world's leading and most widely adopted cryptocurrency, and it's maintained its dominance even as the number of digital assets has grown to over 20,000. So what's driving Bitcoin's growth? Well, first, the continued digital transformation of the global economy. It's changing the world of finance. And with that, creating a growing interest in digital assets and new use cases for Bitcoin. Second, younger generations are more likely to be considered digital natives, resulting in higher rates of Bitcoin adoption. And lastly, certain global trends such as rising inflation and geopolitical divisions have increased Bitcoin's appeal as a scarce asset that exists independently of any one country or central bank. In parallel to the three aspects driving Bitcoin adoption, we've also seen some shifts in the overall industry. In particular, there have been key developments in the infrastructure of the Bitcoin ecosystem, and the regulatory environment has and continues to evolve. Now, the combination of all of these factors has helped bring us to this moment, the availability of Bitcoin ETFs, which are helping make Bitcoin more accessible to investors. For more information, visit iShares.com.
Now, if we're already in the middle of a sovereign debt crisis, what does that mean, and how in the name of Satoshi is that bullish for Bitcoin? Jack Mallers just laid it out, and we're about to roll it right after these words from our sponsors powering the show. If you're not running a node, you're not verifying your own transactions, and you're relying on someone else. The Bitcoin way will get your coins off of the exchange into cold storage and guide you step by step in setting up your own node. This isn't theory, it's hands-on training from the masters of self-custody. If we're entering a new world order, you better be sovereign in this one. Visit thebitcoinway.com/Satoshi to book your consultation. That's thebitcoinway.com/SATOSHE. Print or die. Metaphorically, this is where we are in the story. And when global uncertainty is at record highs, the world order is breaking down, and sovereign debt crises are on the horizon, it's actually pretty hard not to be bullish for Bitcoin. And speaking of sovereignty, you can't talk about the future of global money without talking about mining, because miners don't just secure the network, they secure the revolution. And if you want to understand where the industry is heading, if you want to be in the room where the signal is happening, then you need to be at Mining Disrupt. Mining Disrupt 2025 is almost here, and you don't want to miss it. The biggest Bitcoin mining event of the year is taking over Miami, Florida, July 21st to the 23rd. This may be the most important Bitcoin mining event in history. The biggest names in the industry, cutting-edge rigs, Bitcoin, and AI integration. The signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Anyway, guys, let me know what you think in the comments below, and as always, stack, slay, and stay bullish, baby.